Good morning, guys. I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. Today starting a little bit later. It's 9:28 a.m. in London right now, and it is August 6, 2018. I hope you're doing well, and if you're having time off and just checking in, I hope you're enjoying your time off. I'm going to be on for the whole week, Monday to Friday, but after that, I'm taking about 1 week and a few days off, so I'll be back. Actually, it's going to be 2 weeks, so I'm going to be back on August 24th, but that was going to be for the live presentation. I'm still going to do a video for you probably on the 23rd, but it's not going to be live in the morning. Rather, it's going to be maybe about midday or something like that. If you didn't pick up already, we have a new guy on the team. His name is Harris, and he's been trading for a few years. I think it's 10 years now. And he publishes updates for you and covers different things, publishes technical analysis. So he's working now side by side with Nathan, and these guys produce most of the content on TradeCaptain.com as well. I publish content as well. And we have Yuri that is still sends us content a few times per week. So don't forget to check it out. If you want to read specifically what Yuri has written, you can go on TC Authors. And here you can find his profile down here. You can read up more about his 3 latest articles. We're working on be able to show more, but most of the things are on the homepage. It's quite straightforward. Just use the buttons here to go back and forward to sort of read the articles. Okay, let's do what we do at this time of the day, and we're going to begin with looking at the markets. So there's not much happening, like just a general overview today. The pound is down with 34 points. The CAD is up with 23 points. Crude oil is just up with 0.5%, which is not that much. And the S&P's down with 19%, with the DAX being down with 0.62%. So there's not too much action. But hopefully this is going to pick up in the next few hours, hopefully. It is August, which means that there's less people around. People are just on the beach taking time off if they can. In regards to the euro, we're still stuck within this range, right? So the trade side was between the June low and the July high, but we're approaching now the June low, and hopefully we'll have something or just sort of people pushing the market below this June low, and we have a break. We just need to be patient and wait for that break. If you have, most softwares have, you can usually just add like an alert, sends you a little email or a pop-up. That's always recommended in these situations. And then we just wait. Right now, if you look online, there's not too much activity. People are not really interested. But usually what happens is that when we have a break out of the range, then suddenly people start to read up. And then when the market is already down quite a bit, that's when they're like, oh, look what happened. I missed that opportunity. It's very, very normal for people to do that. So we want to avoid that. So a break to the June low, really, that's where we're looking to get involved potentially for a break to the downside. While we at it, let's just take a look at the pound. So this is the pound versus the USD. And a few days ago, well, actually, I'm not sure if I actually told you all about it, but a few of my clients, I told them look to sell at 132.16 with the stops at 133.16-ish. And I said, look for it to head to the downside. And then I said, if we swing up to 130.85, I think trade's going to sell again. Now, this market is trading to the downside, but it's not really trading with sort of a nice trend that I sort of like. I don't like the fact that it goes down and quickly up, down and quickly up. So I think we're going to potentially trade to the downside here today and eventually reach 127.76 down here. But I don't necessarily think it's going to be an easy trade, or it's going to go very quickly. I might be wrong, but I don't really think that's going to happen. Anyhow, take out the low. I think we can head to the downside. Let's move along. So this is the Bitcoin. Fortunately, we got stopped out here on the last move. So in the past we said look to buy here for this to head to the upside, and then we said okay, you know, it's possible to book profits here and buy on a dip, and we bounced first time, but then we just slid straight through and went below this level here. And when we did that, the market stopped creating higher and higher lows. So we're not creating those higher and higher lows anymore, and this market is slow down really. This ended the trend. So now it looks to me that this is a major high again, like the one we had up here and up here, and we haven't had too much backup of many of the other altcoins. And Ethereum, Ripple, Bitcoin Cash, they're all very soft, to be honest. There's not much happening, and because they are not rallying, it's very difficult for Bitcoin to maintain sort of momentum by itself. So I think this is going down now. I think it's probably going to continue to go to the downside. The stop level is usually a good level to get involved and get short. The alternative here would be now to wait for a pullback, and the new major high trend defining level is this high up here. We don't have to work with the actual July high, we can work with the July 30th high. And then the idea is that if the market swings a little bit higher here, it's probably interesting to potentially sell and do something like this. But this is the best. So this is the best coin right now, more or less, out of the big coins. It's easier many times to work with. Maybe something like, I think Ripple is, if anything, something to keep an eye on. This is Ripple, and it should potentially be enough for me to work with. This level up here, if I show in a 4 hour, this is a 4 hour chart. So if we take out maybe the low here, I think traders will most likely sell. You might have some stop loss orders. So you're looking at a risk of 7%. And when you take out a low like this one, traders seek out the next low, which happens to be our next resistance level. And the only really interesting levels are down here. Of course, you have these highs here, but I don't think they're as relevant. So we're looking at a risk of potentially 7% or 14 cents. So 14 cent potential profit over a risk of 2.65 cents. That's 5 times your risk. So this is a very good risk reward ratio. What's the challenge then? Is it very easy to make money on these cryptos? Fortunately, it's not. People don't short this market as much as they like Forex, for example. So I think we'll break the low, and people that are long are gonna get panic. People that bought down here, because trust me, there are people that bought down here and thought that this was gonna go. They were poor from the beginning. Well, not poor from the beginning, but maybe they didn't have too much money. Maybe they put like 2-3 grand, and then that was rude actually. Sorry, I didn't mean it like that. I don't want to sound elitistic, but I think a lot of people, what they do and they do wrong is that they just buy something, and then of course it was up 1,391%, and then instead of booking profits, they hold on to it. It's just the way humans work, because they believe that they've struck gold. Just so many people that believe all the time that they struck gold. They don't know about technical analysis, and it's like that sometimes. When I started trading Forex, I didn't know nothing about technical analysis. It took me a few years before I understood fully how it worked. And it's the same thing here. People bought because it's a great idea. Ripple, cool coin, rallies to the upside. They made a lot of money. They never booked the profits. And then when they move down, maybe they're watching this presentation or somebody else's presentation, and they tell them, you need to use a stop loss. And that's how they realize then afterwards, well, hey, I need to use a stop loss. And then suddenly they start to apply that. And I had the same issue. I was up over 40% on my account when I was at university. I had an account with 2,000 euros in 2006 and made about 40% initially. And being a student, that's a lot of money for party. and food. So you know, it was a good time, but then eventually reality strikes back. Anyhow, Bitcoin, clearly bearish, but it's one of the stronger ones, can easily move to the downside in line with what I just shared with you guys. Now, with all these markets, what do you want to do? Well, usually it's the one that underperforms that tend to weaken most. Not always, of course. It could be Bitcoin is going to be the biggest loser, but I think coins like Ripple or maybe Ethereum, if they break the lows, I think you'll have even more weakness in those markets than trying to bet on Bitcoin to catch up with everything else and vice versa. Okay, this is gold versus the USD, and the market is bearish to the down. It's bearish, really. You know, the market took out the lows here a few days ago. You might remember we should look to sell at 1,226. We hit the target, and then I said if it swings back up here, I think it's going to go down again. So we swing all the way up. I know the non-farm payrolls were not good, and you saw some selling, and people, usually what they do is that they wait a bit and see, okay, what is the reaction going to be? Are people going to continue to sell? And you can see here that they did sell a bit, but then that was it. Maybe we'll swing back up, but the way this technically looks like is still a downtrend. And my idea was to sell here for this to test the low again. So I'm sticking with that view. Here is West Texas crude oil. The market is just trading size between 66.92 and 70.45. Okay, bullish on a break to the downside, bearish on a break to the here. Okay, here's the DAX 30. When we were trading up here, that it was to buy somewhere down here. The market cut straight through here and then found support. These buy zones, sometimes it's okay to just buy when we touch the buy zone, but if you're looking at the market and you have time to actually work with the market, you can see that we touched the buy zone and then the market just continued to trade. There was not like a single bullish candle on the 30-minute, and surely must have been something. Yeah, there was some bullish candle on 5-minute, but there was not anything on the 30-minute. There could have been a warning sign like hold off with a new position. The market did finally bottom out at the bottom end of this range, and we're still technically about 12,462. And I suspect the market can bottom out here. Is it going to happen today or tomorrow? I don't know. Nobody really knows. But as long as you're about 12,462, then probably to the upside. What are the big themes then? Well, trade wars is one that people are still talking about. Maybe Donald Trump again is going to come back and say, you know, maybe potentially, you know, try to talk down the dollar. Not sure if that's going to work out though. Otherwise, I really struggle to find themes like trade wars, China. You have some strong trends there on the downside. Otherwise, it's a bit difficult to sort of find a nice theme to work with right now. We do have some interesting things coming up though. You have the RBA central bank rate meeting coming up this week. Happens on Tuesday morning. Could potentially create a breakout out of the Aussie dollar versus the USD. This is the way the Aussie dollar looks like, and this is a daily chart. There's not much happening here right now, but a break to the downside, bearish, break to the upside, bullish. You have the New Zealand central bank as well coming up this week as well, which is another potentially big mover. I think that's on Thursday, if I'm right. Actually, you have Australian employment data. Sorry, this for some reason is wrong. RBA meeting tomorrow. RBNZ meeting on Wednesday. Canadian non-farm payrolls on Friday as well. That's definitely interesting to trade. Those are 3 good opportunities to trade. There are other data as well. Not really sure though it's going to be too much of a market mover. Yeah, I think that's it really. Maybe no, you have some GDP numbers from the UK coming up, but no, I don't think that's going to be a big market mover. Okay, so we got a question from Hi. Looks like Euro Aussie has broken out of its channel, looking to sell on a test of the bottom of the channel as a new resistance. And we have Oliveri here as well. Good morning, Maurizio, to you. Yes, in regards to the Euro Aussie, we had a break to the downside, and it would have been a good opportunity to sell. So the market traded to the downside at 156.90, and I suspect if we go up a bit, we can load like a 1 hour chart, and because we had a sell off here, and then we had a retest immediately, and then we just moved to the downside. So this is something we can work with. I think we should be able to just put a fib like this, and I'm willing to just remain bearish as long as trade below the high here at 156, 157.52. So if we swing up a bit, maybe to 56.64, maybe 56.77, I think trade's gonna look to sell here, and then most likely we'll probably see something like this down. Remember, as always guys, when we trade, one individual trade, it's impossible to know what's going to happen, and this is not a sure thing. So when I trade, try to find several setups, not necessarily several setups in one day or in 1 week, but maybe 3 positions in a week. So I think up until now, I think I traded maybe 100 times this year, and I know out of these hundreds, I know certain, like I have no idea if the next 10 is going to be winners or losers. There's probably going to be a mix of them, but I don't know which one is going to be that big winner. And by big winner, it's all about the risk reward ratio. So here what's good is that we could potentially risk about 74 pips, and we could potentially make something like, if we just go down to the first target, so 173 over 74, that's 2.3 times our money, or risk, sorry. So we don't know if it's gonna be any of those. And you know, if it continues to trade to the downside, a little bit like your CAD, then maybe even more. 345 over 75, that's about 4.6 times. That's a really, really good trade, a 4.6 time return. You do one of those, and you know, it covers, not, it technically depends on how you do it, but the way I operate is that I try to reduce my stop loss. So I sell, and then I reduce the stop loss. So because I sell, also reduce my stop loss, I will maybe 30% of the time take a full loss. So I would take, say I short here, I risk 1%, I take a full loss on 1% of my money. But I try to reduce that, so my actual loss is in fact closer, or I try to make it about 0.5% of my initial risk. So that means that one of those big winning trades, it doesn't just cover 4.6 times my average loss. It will cover 2 times that. So we're talking about 9 losing trades, more or less. And again, I don't know if this is gonna be it. Because it's August, it's summertime, maybe it's not gonna be it. But it could be it. I mean, there's been some good moves. If you look, gold was a good move. Silver was a good move. I traded copper as well. That was a good move. So it's possible to make money, definitely. But we don't know exactly. And because we don't know exactly what's going to be the winner here, never ever bet too much on one single individual trade. Probably one of the better things to do is just to risk max 1% of our money per trade. Now, if you're scalping and you trade 5 times a day and you have 5 winning, 5 losing trades, you'll be down with 5%. Now, that's not too great. If you do that for a whole week, you'll be down with 25%. And that's very high risk strategy and not suitable. So maybe at that situation, we need to split things up. If one is scalping, then instead of risking 1% per trade, maybe you risk 0.5% per trade, something like that. And you don't trade 5 losing. If you get it wrong 3 times, then maybe you stop. This way you'll have less volatility in your account. In my case, I do maybe 2 times risk, but I trade less frequent. I hold the position for a few days and longer, whereas the average trader holds positions for 12 hours. And I think the reason why the average trader, not the reason why they hold, but I think everybody's been indoctrinated really to hold positions for a short period of time. Whereas if you talk with a stock investor, they're going to hold positions for 6 months. I mean, that's really what they do. There's obviously people trying to day trade stocks as well. But most people, they tell each other, yeah, you need to hold this for longer. They have a 6 month view, 1 year view. And that's how you make money on stocks. And I'm not saying we should have a one year view on the currency, but we can definitely have a 4-day week outlook or a 2-week outlook, and this qualifies for that, I would say, because we have the break to the downside, and it's probably going to take a week or 2 before we touch the target. The idea is this though: we wait and execute on this breakout, and we wait for this to happen. I waited quite a bit here for this to break to the downside, and we trade less frequent, but we have higher quality, and that affords me to have slightly higher risk, and that's up. I'm up with about 30% this year, and last year I was up with about 127%. So and it's because of those high quality trades, not because I trade a lot. Okay, we don't have any questions from Mauricio or any more questions from Hi. We're gonna wrap things up. Guys, don't forget to hit that like button. And don't forget, I'm gonna be on here for, here's the like button, click down here. I'm gonna be on here for the whole of the week. So join me in the morning. Tomorrow we'll be in at 9 a.m. London time as always, as usual. Thank you.